Fact or fiction, venture capital is the primary funding source for startups. Welcome back to Side Income Secrets, where we uncover the truths about making money and building wealth. Today, we're diving into a topic that stirs a lot of debate in the startup world. Is venture capital really the primary funding source for startups? Let's break this down. Venture capital, or VC, has gained a reputation as the go-to funding source for many aspiring entrepreneurs. When we think of successful startups, we often picture the likes of tech giants that have raised millions, if not billions, from venture capitalists. This leads many to believe that without VC backing, a startup is doomed to fail. But is that the whole story? First, let's clarify what venture capital is. It involves funds from investors who provide capital to startups in exchange for equity or ownership in the company. This type of funding usually comes into play when a business has already demonstrated some level of traction and potential for growth. But while VC can be a powerful tool, it's far from the only option available to entrepreneurs. In reality, a significant number of startups get their initial funding from other sources. Personal savings, often called bootstrapping, is one of the most common ways entrepreneurs fund their new ventures. Many founders dig into their own pockets, investing their savings to get their ideas off the ground. This approach allows for greater control over the business and avoids giving up equity too early. Another popular funding source is friends and family. Many entrepreneurs turn to their personal networks for financial support. While this can be a great way to secure initial funding, it also comes with emotional stakes, as personal relationships can be affected by business decisions. Then there are angel investors. These are individuals who provide capital for startups, usually in exchange for convertible debt or ownership equity. Angel investors often offer not just money, but also valuable advice and connections, making them a great resource for early-stage companies. Crowdfunding has also gained traction in recent years. Platforms like Kickstarter and Indiegogo allow entrepreneurs to present their ideas to the public and raise funds directly from potential customers. This method not only provides funding, but also validates the business concept by gauging public interest. Moreover, many startups benefit from grants and competitions, especially those in tech and social innovation sectors. These funds do not require repayment and do not involve giving away equity, making them incredibly valuable for early-stage companies. So is venture capital the primary funding source for startups? The answer is nuanced. While it can play a crucial role in scaling a business, especially in later stages, it is not the only or even the primary option for many entrepreneurs. Each funding source has its pros and cons, and the right choice depends on the specific circumstances of the startup. In conclusion, venture capital is just one piece of the puzzle when it comes to funding a startup. Many successful businesses have thrived without it, relying instead on personal savings, angel investors, crowdfunding, and other avenues. As an aspiring entrepreneur, it's essential to explore all your options and choose the funding strategy that aligns best with your goals. Thank you for watching this episode of Side Income Secrets. If you found this information helpful, please give us a thumbs up and subscribe to our channel for more insights into building your wealth and achieving financial freedom. Remember, every great journey begins with the first step, so take yours today.